Hey everybody, hey traders, Chris Pulver here. Welcome back to a little weekly outlook. It's just after 1 p.m. on Monday, August 11th. Big news that we have this week, taking a look at the Edge Finder. What's going to happen to the old inflation print? Interestingly enough, on the Bloomberg calendar, let me go over here. Okay, let's just go to this week on Tuesday to Thursday. Go into your U.S. news at 8:30 in the morning. Forecast for core CPI year over year is previous print was 2.9, forecasted for 3%. Another increase in core CPI. This has been the main reason that the Fed has been pushing back on cutting rates so far because inflation keeps ticking higher. You go to the headline CPI year over year, previous was 2.7, forecasted 2.8. So we're potentially seeing again a higher trend in inflation, which would make 1, 2, 3. That would be 1, 2, 3 months trending up, which we've seen in the past. 1, 2, 3, 4 months trending higher. 1, 2 months trending higher. 1, 2, 3 months trending higher. You know, this whole idea of like 2% inflation target is proving to be very, very difficult to get to. I also wonder going into 2026, once Powell is gone and we have a new Fed chair, is this going to be adjusted? Are we going to see like a 2% to 3% acceptable inflation range, not necessarily an inflation target, and that provides, you know, maybe the growth landscape where it's like we can push hard, we can, you know, grow or outpace inflation and do so with the Fed cutting a little bit more aggressively, hopefully without stoking too much inflation. You know, most of the inflation right now is seen in the services side, and you know, tariffs haven't really hit yet. There's still uncertainty on whether or not they will, but are tariffs actually going to hit consumers or tariffs just hitting producers? I'm not sure, and that's kind of a TBD. But anyway, for this week, both core and headline CPI forecasted to be higher. If the market takes that in a negative way, I could see us getting some risk-off trading this week. Here is the July 31st high in the S&P and the August 1st low. That was a major week where we had Mag 7 earnings plus FOMC plus non-farm payroll and the tariff deadline August 1st, and we essentially created a big range from high to low. So I do wonder this week if inflation is as forecasted or slightly higher, if the market doesn't love that and we start to see at least this roll over a little bit. So if we start to break, let's say this low, we get on the right hand side of this trend line, you know, this is a 3% range. It's about 3.3% from top to bottom. If we break these lows, I could see us having about a 6 to 7% correction from peak to trough, at least getting some of this like summer sideways choppiness that I've been talking about. Most of Europe's on vacation. Most of U.S. families, you know, trying to squeeze in a final vacation or something before kids go back to school. So it's a little bit lighter in August. You're seeing that in currencies and volatility as well. Things have been pretty quiet for the most part. I'm just not convinced we're going to, you know, make these aggressive runs to the upside. I think we go sideways for a little bit longer. I still like the pullback zones I've talked about for these last few weeks. You know, pulling back to the 50-day, pulling back to previous all-time highs, having somewhere between like 4 to 6% corrections, maybe on the high side 6 to 10% corrections. I'm interested in buying dips on all of that. Okay, I don't know if the market's going to keep pushing higher through August without having a correction in September. I would find it very hard to believe this market doesn't have some type of decent pullback or meaningful correction through the month of August, September, and even into October. All right, so we'll find out. So that's S&P, NASDAQ, pretty similar. Here's QQQ, you know, just poking these highs, but if it's going to be range bound, we still have a pullback zone, previous all-time highs, you know, dynamic support a little bit lower, and I'm looking to kind of buy some dips in here. Going into currencies, dollar index continues to make slightly higher lows, and therefore slightly higher lows, maybe slightly higher highs as well. If the dollar catches bid, it's risk off trading, in my opinion, if the dollar goes up. I still like, you know, getting a short position running on the dollar, but I want to trade that at the, you know, 101 to 102 area. If I'm going to fade the dollar, I want it to be 101, 102 and see if the dollar hits to the downside. I don't want to short, I mean, again, I could say this now. If I want to short the dollar now, I got to short it at, you know, now at a small trade and possibly the 100 handle and then possibly the 101, 102 handle. These have to be all very small trades, because to me, the stop area is going to be up here. As long as price doesn't invalidate like 103, all this is like leveling into the dollar to see it retest lows. I still think the dollar has the ability to retest lows. But any risk-off trading in the markets probably get a bid for the dollar to go back up.
With Pulver Alerts, you get access to the complete log of all of Chris Pulver's trades. But who is Chris Pulver? Chris has over 20 years of trading experience and he's a licensed money manager. He trades all aspects of the market, including Forex, stocks, ETFs and futures, crypto, commodities, and just about everything else. Let's talk more about where you can find these trades. Inside of the A1 Trading Discord, on the left-hand side, you'll find Chris's section. It's broken up into different categories to make it easier to find the trades you're most interested in. Here, you can browse his trading journal, where he shares videos and general market analysis, his indice trades, commodity trades, Forex, stock and options, and his futures trades. All trades come with analysis, including entries and exits, risk to reward, and more. We're very excited for the future of Pulver Alerts, and we hope you are too.
We've seen the same thing in bonds in the U.S. We're trading at 87. We've been making slightly higher lows. Maybe if we get up here towards like 89 to 90, maybe slightly higher highs. I still think the bond market is still going to be in a medium to longer term bear market. So even if we have pops to the upside that's short term, then we probably see the bonds turn lower, which potentially mean that yields turn higher. And that's another thing that's kind of uncertain for 2025 is once we see rate cuts in September, what do the yields do? If the Fed cuts rates, it's not necessarily changing the long end of the curve. So if they cut rates by 25, 25, 25, does that mean that bond yields go up by 75 basis points or go down by 75 basis points? This would be, if we go down, that's great for the US economy. If they go up, that's bad because that would make borrowing more expensive again. And if anybody has any ambitions to buy a car, buy a home, refinance anything with yields higher, that's not going to be good. So I think that could be a big headwind for the consumer. But again, this all happens September to December. We'll see what it takes. I think the market can absorb a lot of things. We've climbed the wall of order for a long time. Let's take a look at gold. Okay, gold is pulling back today. I still think this market is range bound on gold. I'm selling lots and lots of puts on my option trades. If I've got some spot traders out there, just watch your key levels. If we come back to this level, that's a great spot to buy gold, right? You can have a tight stop loss, trade on a smaller time frame, turn at this support level. If it comes down a little bit lower, same thing here. We have previous lows, a little 144 moving average. You can go down to a smaller time frame, try to get a nice precise entry, and go after a high reward to risk, put in a break-even stop loss, let gold maybe go back to these highs. I think gold is, maybe range bound. Possibly it comes back a little bit deeper, but I wouldn't say we go too much lower than like the 3,000 handle. I think if gold's below 3K, it's a bargain. I don't know if we're going to come back that low. This has been I just see like a big ascending wedge. And if we just consolidate, I think gold with, possibly stickier, higher inflation, possibly a risk on rally, possibly an anti-dollar play through this kind of like secular bear market of the dollar. I can see gold getting a lot of love through the end of this year into 2026. I can see Bitcoin doing the same thing. I can see silver doing the same thing. So trading, all those accordingly. I still like silver a little bit better because I can see the spot price here at $48. That's like a 26% increase. That would be back up to all-time highs, 2011 and I think it was 2011, 1980 highs on silver. So I'm just going to keep buying dips on silver. Bitcoin. Pretty interesting weekend on Bitcoin. I was getting chart alarms last night going off around the 120, 122 handle. We didn't quite break all-time highs. Maybe consolidation here, right? Maybe some consolidation. But again, I'm seeing so much stuff happening from countries that are buying Bitcoin to, private equity like Harvard's endowment fund buying Bitcoin. They've got like $116 million in Bitcoin right now with BlackRock's IBIT. So just the spot price alone, I've got a symmetry measurement out to 132. I think we get there. We've got some momentum up into this fib level around 145. As a trader, if we get into like 145, 150, I could see room for a pullback, but nothing more than maybe like a 1, 2, 3. There's clearly some strong support. So we could have a big correction, but still, do we hold the structure and maintain like a big bull market on Bitcoin? Again, weaker dollar, printing more money, quantitative easing, any of these things happening in the next 6 to 12 months, gold probably does better, Bitcoin probably does better. And I think that the smart money and big institutional money is still adding now that it's becoming more and more, acceptable and more mainstream. More money seems to be flowing into Bitcoin. So I don't think it's a bad thing. Ethereum this weekend, Also poked some recent highs. That was a pretty good stretch on Ethereum. For Pulver Alerts, we took a trade on ETHA and took some profits, already up to some fresh highs at 32 and change. Copper, nothing there. Japanese yen, let's take a look at some currencies. Watch your mags this week. You know, we had Apple that had one of the best weeks since 2020, and that led the market a little bit higher. Mags is up because of that big rip in Apple. Apple had, like I said, one of the best weeks since 2020. That was post-COVID. Amazon filling the gaps. Broadcom still creeping up towards highs. Google continues to push towards all-time highs. You know, Meta gapped on earnings and has been hanging out there. I think there's room to buy some dips on Meta. Microsoft faded off of earnings, but I still think has a lot of good dynamic support. Netflix off the, this is a 100-day moving average. NVIDIA, I sold some puts today on NVIDIA that I'll share. I'm doing kind of a fancy trade where price stays above this yellow box. I'm pulling in about $500 of income. Tesla, starting to look a little bit more promising on Tesla. I think September through the end of the year, if Tesla's getting some love to the upside, this might be the AI, the humanoids, profit margins, growth coming back into the mix for Tesla. So I like, you know, holding long shares Tesla and still trying to see if this can be also a $1+ trillion company that gets back to all-time highs. That'd be a heck of a run on Tesla. Bonds, I'm good. Let's get some currencies here. China, fine. Here we go. Okay, Aussie CAD. I'm long Aussie CAD since 89. I've got 89 and I'm pending at 8,800. I'm pending at 8,750. So I'm still looking for Aussie CAD to head up into 93 to 93.70. But I'm still looking to see, like, this could be just a big range where it won't break the highs, won't break the lows. I'm looking to see if I can buy the lows or buy a dip and then take this thing for a swing. So I'm long already with these equal lows. I'm trying to get in again at this level and this level. This is my stop loss going after 93 to 93.70. Okay, I like Aussie CAD long. I like New Zealand CAD long. I'm long on both those currencies. This one pulled back to the 382. I have a pending order at 80.85 to buy New Zealand CAD to swing up to the symmetry level, which is around 85.95. Okay, Aussie Swiss looking a little bit better. If this can be a symmetry push, low to high, higher low to higher high, that would be fantastic. A fifth wave move puts us up even higher. I'd be happy to see it get up into this area for target 1. Any fifth wave move coming up into this ballpark here for target 2. Trying to enjoy some positive swap right now, but still not really turning a major corner. If we see gold correct a little bit more, that should also push the Swiss in the weaker side. Japanese yen, still be very careful on the yen crosses. Aussie New Zealand, I'm still holding long. Aussie dollar, I still like long if you're willing to dollar cost average. I like this one if you're, anywhere in here buying, willing to buy at deeper discounts and stop loss below. This is open space trading to me. Just a crazy grind. But if we get up to 68.50 to 6,900, I think Aussie dollar has that target. So it's a slow, choppy move, but to me it still looks like the ability to get up into this open space resistance up here. That's Aussie dollar long. CAD Swiss, hopefully this one will form a bottoming pattern. If we sweep these highs, low to high here, if we take it out, pull back, swing for a wave 3, swing for wave 5, get back up to this choppy zone, past support resistance. 63.50 would be a great finishing target here if I'm long CAD Swiss. My break even is around 60.50 right now. So that would be a big profit chunk if I can, have the courage to hold on to it, which I've been in this trade for over 2 years. So I'm going to continue to hold it, enjoy some of that little 3% swap right now, 3.5% swap right now. CAD yen staying out of that one. Swiss yen, pull back a little bit. If there's a topping pattern, that was a good time. That was a daily overbought condition. Just missed that one, 186. So let's see here. Do we end up breaking, high to low, lower high, lower low? Maybe this. Maybe it's a big topping pattern coming on Swiss yen. One could be so lucky to have the actual Swiss yen go that way. What's interesting is this going to the downside is positive swap, which you don't really see that on anything holding Japanese yen. You get positive swap by holding Swiss versus yen short. It's not a currency pair that I want to trade without confirmation. So be careful on maybe a pop up here. If we have a double top opportunity, that could be a great spot to sell. Or if we have a pop to the upside with more divergence to participate in the right side of the trend line and coming all the way back down to 166. This could be a big opportunity. I will be watching Swiss yen. I'm almost willing to trade it. Not yet, but with a good setup, I'm willing to trade that. Euro Aussie, nothing. Euro CAD, nothing. Euro Swiss, nice pop on Euro Swiss. I've been long in this one for a while. I'm looking to see if this gets back to like 95, 95.50. If we get to 96 and change, I'm taking profit. I do think this could all be a double bottom. Like this support, this resistance could possibly stretch up even higher, getting into like almost parity at 1.00. But if I hit 96, I'm taking profit. We hit 99, I'm taking all my profit. And I am kind of packing my bags up on these 2-year trades I've been in if I get to my profit targets. Euro Pound, I'm just doing some robot trading on this one. Euro Yen, nothing there. Euro New Zealand, nothing there. Euro Dollar, I could see this one still pulling back a little bit if we pull back to this level. If anybody's interested in buying Euro Dollar, I think the 113, 112, 111 area, some pretty good structure to be buying dips. I mean, if you really want to short the dollar, buying Euro Dollar to get back to these highs, if you're scaling in, I think this would be a great spot to get long back to 118. We might even go even higher to 120. A real bear market in the dollar probably puts this thing up to 125, 130 in all honesty. But I would just trade structure here. If you just eliminate stop losses and get this thing back to 118, just go break even or better. If it goes higher, trail the stop losses. But I'm looking at like dollar cost averaging down here if I want to go long Euro Dollar, which would ultimately be a short against the US dollar. Pound Aussie, sideways. Pound CAD, nothing. Pound Swiss. If you bought the Pound Swiss, what a great trade there. I did take a buy trade at 108, and that was down here near equal lows. I was going to go 108, 107. So for Pulver Alerts, 108, 107, trying to get long in here, and I would take this thing, be willing to take this thing back up into this area, and there's a big fat pocket between like 113 and 114. So if this wants to come all the way up like bull flags, bull flags, bull flags, we could have a lot of fun making, probably 400 to 500 pips on that Pound Swiss if it continues to go up. So great opportunity to buy, really good support, good trade. I hope you're long. Hope you're long on that thing. That should be good for like 111 to 112 profit targets. Pound Yen, nothing on this one. Pound New Zealand, range bound. Pound Dollar. I honestly think Euro Dollar is a little bit better. If this is high, low, lower, high, lower, low, one more time, maybe until like the 1.3,000, 1.3,000, looking to buy, stop loss below, and see if this wants to resume the uptrend against the dollar. But that would be my stop loss area. If it collapses and we never really break this trend line, then I wouldn't just force a buy trade. I think Euro Dollar has slightly better structure. This was the inefficiency that I think price is going to fall back and find. And if we find that, that's going to be my demand zone where I see price going back up. But trade that with confirmation. New Zealand CAD, I'm still holding long. Like I said, New Zealand Swiss looking a little bit better. If I can get a symmetry trade here, that would be pretty lovely. Low to high, higher low to higher high. Even if I get a fifth wave, symmetry this thing up to like 5350 to 5400, and also enjoy some positive swap along the way. New Zealand Yen, no trade. New Zealand Dollar, similar to the Aussie Dollar, open space and resistance all the way up here towards 6370. If you're willing to buy small, and even down here, this is an inefficiency maybe for a level. This is level 1, level 2. Stop loss would be below these lows, but open space trading up to like 6300 to 6370. That'd be my profit target long New Zealand Dollar. Dollar CAD, we are on the right hand side of the trend line. There's a couple ways I could see us taking the trades on Dollar CAD. If I buy here, I either have a stop loss very tight in the swing and see if we get back above the 4,000 handle, or if I buy small enough that I buy more here for trade 2 and I buy more down here for trade 3. So if level 1 gets me up into some profit, I just take the profit, cancel these other orders. If level 1 is filled, but it pulls back to level 2 or 3, I'm going to kind of buy this bottoming formation, if we get a bottom on the right-hand side of the trend line, and then look at this range to go from support back up to resistance. And even if we take profit here at, take profit at level 1, have a winner, have a winner, have a break even. That's fine managing wise, But if it's bought low enough, I think Dollar CAD still goes up. Okay, Dollar Swiss should be looking a little bit better. Again, if we can kind of call this a bottoming formation, we get out of this low, we sweep this high. So left structure, sweep that high, bottoming pattern, measure it to symmetry. That'd be a great pocket right there to trade it back to. My break even is around 8,300. So if I can get this thing up to like 87, 88, that's a nice chunk of profit. I'll be happy on Dollar Swiss taking that profit off. Okay, Dollar Yen, possibly still just a channel. Watch this level, watch this level. Right now it seems like it is still just lows and highs, lows and highs. Stay with that structure. If this structure breaks, there's a great trade back down to 140. I just don't think it's going to break for a while. It's still kind of range bound. But be on the lookout for that massive, massive break. It might come way the heck up here, though. We might have a dollar yen that sets up way up here and then ends up going all the way back down to 140. So time will tell. If I can find a good trade, like honestly, of all the yen crosses right now, Swiss yen probably looks the best. And it still needs a bit more confirmation, but because it's slightly positive swap, holding dollar or Swiss yen short, it's slightly positive, so it doesn't cost you anything. But man, I want to trade like a good, clean bear pattern as opposed to just guessing, because we never really know what the Japanese yen is going to do, right? Okay, all right. So we did currencies, we did gold, we did silver, we did Bitcoin, we did indexes, top down for the week. Inflation coming this week from the U.S. on Tuesday. Let me check and see when is our inflation. Is it PPI? We have retail sales on Wednesday. Looks like Thursday is going to be our PPI. Thursday morning should be 8:30 a.m. Yep, so PPI forecasted to see month-over-month, year-over-year. So we have year-over-year. Previous is 2.6. There's no forecast for this week. But watching core and watching headline. 2.3 previous and 2.6 previous. So are we going to see CPI and PPI both print higher? Yes, no, maybe so. Keep an eye on it. Okay, so watch the ranges. Here's your high from July 31st. There's your low from August 1st. So we're still going to stay for a second week inside this range. Is it risk on breaking the highs, or is it risk off to revisit the lows and possibly sell off a little bit more through August into September? Time will tell. That's what I'm watching. All right, look for some pull roads coming this week. Hope to see you in some live sessions. Have a good week. I'll see you soon. Thanks. Bye.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.